Over the last month and a bit, the tide has really turned against renewable energy companies. You can see it in the media, you can see it on socials. People are just not as excited about these businesses as they were 2, 3 months ago. And there's a good reason for that. Because of the election down in the US, because of the geopolitical problems in the world, a lot of these companies don't seem like they're quite the investment opportunity they were 2, 3 years ago. They really do seem like they're in a position where a lot of them are going to struggle and a lot of them are going to die. However, in today's video, we're going to talk about my personal favorite green energy company, the one that I'm using to make sure that I'm exposed to this industry that I do believe will grow in the future, and the one that I think could benefit the most from the trimming of the fat out of the green energy market, and that could show up as the top dog up here in Canada after this market cycle is over. Welcome to Golden Arch Investing. My name is Liam. We talk all about investing in Canada. Today's company is Brookfield Energy Partners. I've talked about these guys once or twice before on the channel. It's a really interesting company that's obviously tied to the brand name of Brookfield, that some people love, some people hate, but everybody has to admit does have a lot of money behind it. And these guys are no exception. This has been an investment vehicle for Brookfield for a long time. They've put a lot of money into this. And these guys, the energy partners, the energy business that has been spun off and is its own sort of separate entity nowadays, have also sort of taken this approach where they have just a lot of money to invest. And that's one of the key things I want to point out. They've also managed to be pretty efficient. They've managed to capture a lot of corporate demand. So what I've gone and done, I went and I looked at the Q3, I believe, earnings call. And I scrolled down to the bottom of the transcript and I was reading when reporters are asking the CEO himself about all these changes coming and what exactly does he think is going to happen. And I want to share some of that with you. So I have some notes up here on the screen. And I do want to start with some generalizations from the whole call. He didn't seem worried. Now, the reporters did. They were like, are you good? And he was like, yeah, I think we are. I think we are good. And he gave some really good reasons for that. He mentioned that there is some sort of anti-renewable energy, or at least anti-government investment in renewable energy sentiment that's sort of proliferating, but that there probably will be an increase in renewable power demand for the foreseeable future. So he's saying, and obviously he's biased, but he's saying, yeah, okay, I get it. We're not as loved as we were 6 months ago, 2 years ago. But that doesn't mean people aren't going to need more energy. One of the common threads of the last couple of years has just been that every new development, be it cryptocurrencies becoming huge or now artificial intelligence becoming huge, comes with an added energy cost. It just seems to be the way the world is going. I'm sure whatever the next big thing is going to be, it's going to require energy. And energy can come from all sorts of things, but renewable energy is theoretically infinite. And so if these companies can pull off better ways of capturing it and storing it without having to rely on the same kinds of technologies we do now, or that just improve the technologies we do now to be more and more efficient, it's a really solid long-term play. Now, there's a couple of things that are huge here. He talks in general about how Brookfield has not positioned themselves to be too dependent on government programs, government handouts, I would call them, to green energy. He's saying, yeah, these exist, right? A lot of companies out there basically, grew and grew and grew and became sort of less efficient because there was free government money. And if you're a company in a space where the government's handing out free money, it's usually silly not to take it. The problem was a lot of these companies focused on that. And so they were making investments and decisions as if the money was always coming. Brookfield says that they've actually been focused on commercial buyers of their power and that they've been looking for ways to do it as a low cost option for the commercial market. They're not interested in taking on as many sort of government projects, or they're not interested in being as dependent on those, at least. They're more interested in the corporate sector. What do companies need? What do corporations want? How can we help you save money by, I don't know, using solar or using wind or whatever option it is that fits that corporate customer. He says that they're going to be able to use this base of corporate customers to make it through regulatory uncertainty, and that while he sees headwinds for the whole asset class over the next 2-3 years, that their position and their access to capital will let them benefit from this. Now, this is huge. Again, I need to point out, I am quoting the CEO. This is the most biased take, right? This guy is the most biased to Brookfield's favor, but I'm inclined to believe him. I'm reminded here of the Canadian oil industry over the last 10-ish years, when we had this period of massive investment that was, supported by the government. And then there was US shale oil coming on much cheaper. We had a problem where we couldn't find other markets. Western Canadian Select was at a discount, and the government was not in favor. The government did not allow certain projects to go through that would have helped, right? There was projects going east, project going west. Various governments at all levels in Canada were like, nope, we're not doing that. Now, this industry is obviously a little bit different, but I see a lot of the same things, right? There's been huge investment, huge government support, right? It's been building up. It's been a boom. And all of a sudden, there's going to be a crash. Now, the lessons I learned, at least from the Canadian oil market, as I've been either living through it as an Albertan who lives in a part of the country that's very dependent on oil, and I've seen sort of the impacts it's had, but also as I've been researching it, as somebody who's really interested in investing in Canada, who really wants to know about this sector, is that basically this next period of time should start to chip away at some of the weaker players, small players, fringe players, people who couldn't do it as efficiently, people who took extra risks. They're not in a good position because there's no longer this huge government support. In some jurisdictions, there's actually been sort of restriction on this. I mentioned Alberta. There's some rules about where exactly you can put things like wind turbines in this province, for example. And there's obviously now the chance for that at a larger scale in the US, which is obviously a bigger market. So I think the weak players are going to die. But what happened here in Canada is as weak players died, or at least got weaker, big players picked up assets at a discount. And they've been doing it until today. Big players in Canada are still picking up assets at a discount. We talked about one a couple months back when Canadian Natural Resources just purchased a huge chunk of rival business up in Athabasca, right? So all sorts of opportunities for consolidation. Now, Brookfield has pointed out they have unique access to capital. Again, they're part of this brand name conglomerate, right, that has a couple of independent companies under it. So they have access to more capital than most of their peers, and they have a lot of corporate customers that are unlikely to stop using renewable power that they've already put the upfront cost on. A lot of these renewable power options, right, the investments made basically pay off like a bond where you put the actual thing in, you make this big chunk investment, and you get slowly paid back over a long period of time, similar to a lot of different energy projects and even mineral projects. It's going to slowly pay you back over time. There's no reason for any of these big players that have partnered with Brookfield to cut investment or to get rid of projects that Brookfield is supporting them on. So a lot of really interesting things. Again, looking at what the CEO said here, they see more attractive opportunities today than they've seen in the last 5 or 6 years. I think this, again, is kind of harkening back to that idea that they're the big fish, and it looks like they're going to be able to eat in the not so distant future. There's a couple other interesting comments, specifically mentioning that renewable is the lowest cost option. They say that they're the cheapest method, bar none. And I wonder what he means by that, right? So maybe there's a couple of metrics that show that it's the cheapest cost in like per kilojoule, but also there's all sorts of other questions like how are you storing renewable energy? I think if somebody can crack that, right? If any company can really crack battery tech using maybe technologies that aren't quite as difficult, right? Using materials that are easier to get, It'll be revolutionary in my opinion. But anyways, so mentions a couple things like that. And there's also the mention of things like nuclear energy, batteries, and biofuel. Now, we just talked about batteries, but biofuel, super interesting concept. We talked about different kinds of renewable fuel sources, sort of like liquid fuels, and the way that we use liquid fuels in so many different ways today in society. Be really, really cool, whatever company can crack that. And then obviously nuclear energy. Nuclear has been a buzzword for the last couple of years. And it was negative for a long time, and it flipped positive, right? All these countries were ripping out power generation up until 2022. And then all of a sudden it's been like, oh my gosh, maybe we needed these nuclear reactors. And in Canada, we do some of the best, cleanest nuclear tech in the world. Just again, I'm showing bias here, but we do have some really amazing technology. It'd be really awesome to see more of these renewable players be like, yeah, this is part of our category, right? Nuclear energy is safe. It is clean. It is, I mean, eventually cheap after a long period of time. It's probably worthwhile. Now, should they be investing in this at a time when they're sort of strapped for cash and they're consolidating? Maybe not. But it would be really interesting to see nuclear fall into the portfolio of these renewables the way it has in some places fallen into the portfolio of other larger energy companies. And again, yeah, what does he think is going to happen? What do I think is going to happen? It's a cyclical business. We're in a down cycle. The strong live, the weak die. So Brookfield's strong. They are the sensible investment in this market. And I do really think it's going to follow what we've seen in the oil industry up here in Canada. Not going to be a huge amount of investment. Probably not going to be great stock market gains for 2 to 5, maybe 10 years, right? The oil down cycle has been almost 10 years, where if you were investing heavy in 2014, it's taken a long time to see really solid stock returns. Now, dividends included, right? You're probably actually doing okay. But stock returns has been a really long time. I think we're going to see a similar situation happen with renewables. And I think it's going to be quite a struggle for a lot of companies. And that does not mean it's not going to struggle for Brookfield. It's not going to be difficult. But I do think they're in a position where they're probably going to be able to do pretty well. Now, I'm going to say one thing that's important. We talked about a couple of interesting new technologies, and I've mentioned a couple times. There is always, in these kind of industries, the chance that somebody disrupts them. And I don't think these guys are in quite the same position as oil and gas, where when the next tech comes, renewables are going to be still around in the way that when renewables have started coming around, oil and gas has stuck it out and still been really important. I don't think we're going to see amazing renewable growth if something else is better. So if somebody comes out with something amazing, right, like a hydrogen-based biofuel that solves all our problems and works in all these liquids reactors, right, and everywhere we put oil and gas, I mean, that's game, right? For someone like Brookfield, is it going to happen? I don't think so. I don't think it's going to happen in my time frame. And I think these guys are in a position where even if there was, you know, a great battery technology out there, right? Somebody had figured it out. That might benefit them. They might be able to invest heavily into that. They might make some really good partnerships. They're just in a position that I don't think any other Canadian renewable company is in, right? Where they could be number one. And I think that that's a really interesting play. And I do think that this is going to be like a slow accumulation phase. I haven't actually even started buying this company. I've talked about it twice now as probably my pick out of the renewable energy sector. But I think the time to buy is coming. I think that it's going to be death by 1,000 cuts for the industry as a whole, slowly whittling down. And as I start dollar cost averaging, I'm anticipating that there's going to be a time when we round and we flatline for a while. And then as things change again, as they eventually will, we'll probably see these companies start to rise, right? And that might be because new technology makes things cheaper. That might be because new governments come in that decide to invest heavier into this industry. I don't know, but it's a commodity and it's going to play cyclically. And so I'm going to play the next cycle. And that's simply how I'm going to do it. That's all I have for you guys today. I hope you enjoyed that video. If you made it this far in the video, please leave a like on the video, subscribe to the channel. And if you think that I'm off the mark here, if you think I'm missing something important, drop a comment down below. I'd love to hear from you guys. As always, when we're going through these kind of companies, I'm learning about them. I'm speculating the same way that any other investor is. With that being said, I hope to see you in the next one.